Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Big pivotal moment for the S&P 500 coming up this week, guys. Taking a look at seasonality here. We are here now, as pointed out by the yellow arrow. We are in the final week of August, where based on the seasonality, the average of the last 20 years, the tendency is that we get a bounce heading into September. The big question is, will that play out again? And of course, we have to check out the performance and accuracy of this seasonality for this year, 2023. Red arrows show when it did not track. Green arrows show when it did. As you guys can see, it's been right more than it's been wrong. But the big thing is that it can be wrong, right? So do I trade based off of seasonality? No, I do not. I use it to help me manage risk. I just track this. I do not trade this. Very different. Okay? So we are here now. So looking at this, this tells me that I should play a little cautiously with bearish positions. The way I play cautiously is I just size down. I take on a little less risk. And I'll always do my best to respect my stop loss. Okay? Doesn't mean I won't trade the bearish setups if the price action gives me bearish setups, level to level style, of course. It just means based on the seasonality, I'm just going to be a little more careful with bearish trade setups this week. Okay? Because there's a strong tendency of a big pop to the upside. And you guys see how pretty accurate seasonality has been this year. Okay? Now, we take this information, we combine it with the charts. Okay? As you guys can see, the July high was hit. Seasonality said we get a July high and we'll melt down. We'll get the initial pop, really nice move to the downside, and then we'll just start chopping down for the rest of the month until we hit some type of low. Overall, that's all we did. Big initial move to the downside was clean, then we just chopped for a little bit. But overall, we made some lows. Okay? So looking at this chart, as always, I got to give you guys the level and the setup so we know if we can confirm or if seasonality is being confirmed or not by the price action. Okay? So remember, I give the bull case and the bear case. This is unbiased, this is objective, this is based, this is balanced. We want to be prepared. We're looking to react. No crystal balls. Okay? So, with that being said, we'll cover the bull case first and then the bear case. But if seasonality plays out with the bounce to the upside, potentially going back to July high, as you guys know, 437, based on my white trend line, must hold on any pullback. Okay? And to be more specific, it needs bears need a daily chart candle close below. Okay? It can bounce below it, a drop below it intraday, but it, more powerful on the higher time frame if we can get that breakdown. Okay? So 437 must hold at the end of day and must show some follow through because defense is not enough. Okay? And offense for the bulls would be to break out 442. That's a good start. 442 is a fib level. You guys should all have this level, but look at here. This yellow line from the July high connect to July 31st high, August 1st high, August 10th high. You even tested around August 24th, okay? A breakout would be above 442. Okay, that would be a good start for the bulls. A breakout 444 back in June high would also be another good sign. And of course, above 445.5, recapture of this green trend line and fib level. In my opinion, the bottom could be in. I've been saying that all week. Until then, We could either be bearish, which is overall what it's looking. I mean, we didn't recapture any critical levels here. But bears also didn't break down the critical level. It broke down on Thursday, recaptured it on Friday. Technically, that's a false breakdown, but it needs to show follow through with a recapture of 442. That would be bullish. Okay? Now, if it breaks down 437, here's the bear case. If it breaks down 437, that's a great sign that we're going to head down lower. But how low? Well, as you guys know, I trade sheep style. No greed. No greed. Level to level. And the levels I got below is, first of all, it's 435-ish. Okay? About a double bottom right there. Almost a double bottom. It's not going to be perfect like they tell you in the textbook, but a few cents off. I'm not going to make a big deal out of it. But I do know 435 is support based on a pivot low. Of course, 433. Pivot low there. All right? Below 437, I got 435, 433, and of course this pivot low over here back in June around 431. Below 431, as you guys know, I got fib levels from all-time high down to October 2022 low. 429.6 is the golden level. 61.8 fib level, 429.6. If that level is lost, it's hard for me to believe that the bull market is back. Okay, we could, like I said, we could go back test. It could be a healthy back test. But if that level is lost, it's hard for me to believe that a bull market is back. Okay. Do you got the bear case? Is it understandable? Is it digestible? Is it, try to make it understandable, because the market can be very tricky. So I want to try to make my analysis or my trade ideas as simple as possible. I think it's important that we be elegant with our trading. Sometimes less is more, quality over quantity. You guys know the cliche sayings. Okay? So don't go forcing trades. Play it level to level. As far as Monday goes, that's the plan. Below 437, I'm favoring we go down lower. I'm thinking we go test 433, but of course, little double bottom here around 435. That gets taken out. It will be a nice victory for the bears down to 433, 431. I wouldn't be surprised if we hit 431 either. Okay? 437 is a critical level. Above it, relief bounce still in play, or chop mode. Okay, not really bearish, not really bullish, but below it, definitely bearish. Above 445.5 is when I would favor the bottom is in. But we shall see. Just look to react. Play those levels I gave you, level to level. If you want to swing, if you want to go for home runs, let your runners do it. If you're trading 20 contracts, secure profit on 12 to 15 of those contracts. Leave the rest for runners. If you're trading small, you're trading 5 contracts, take profit on 3 to 4 and leave 1 or 2 as runners. Okay? If you're going to go for home runs or swing, don't take on too much risk. It's not worth it. We want to build consistency, and we don't want to do it with greed. That's the sheep style. That's the sheep's model. Now, as far as QQQ goes, if it is going to follow the seasonality and be bullish, as you guys can see, we're getting some selling pressure around that 365 to 365.5 zone. If that clears 367 and 369.5 in play. Now, I got this blue trend line, and it's aligning very close to my fib level at 369.5. So above 369.5 would be a pretty good victory for the bulls, in my opinion. And we'll put 371 and 373 and 375.6 in play. I can't really get fully bullish until that 375.6 level is recaptured. That's the critical level I have. From all-time high down to October 2022 low is my fib level. You guys should have that already, hopefully. But for new viewers, I have it from all-time high down to October 2022 low, my Fibonacci levels. And you will get 375.66 as your 78.6 fib level. I will be a lot more bullish if that level is recaptured. It also aligns with my orange downsloping trend line here. Okay, so break out of that, the bottom is in. Otherwise, if we start breaking down support, 363.4, 361, 359, 357.5, It's not looking bullish. If you're breaking down support, pay attention to the price action's behavior, and whatever it is, we just follow it. If the behavior is bearish, we just follow it. We don't argue with the price action, okay? Now you got my bull case, bear case. Dow Jones, we broke down 342.5. That was a critical support level. As you guys can see last week, we finally broke it down. And then what happened at the end of the Friday? Recapture. False breakdown setup. Follow through. This got to be followed through. Okay? This got to be followed through. 344 and 346.5 must clear. Those levels clear, that's the follow through. With 349, 351, and 353 back in play. Okay? If we break back down, 342.5, that's a false breakout or a false recapture due to the context. It's a false recapture. In this context, it would be a bearish one. I would be bearish below 342.5, all right? With 341, 339, what is this? 337.7 and 336 in play, guys. IWM still, I'm not seeing nothing bullish about it yet. And I'm open to it being bullish, I am. But price action got to tell us. And it's got to clear 185, 186, and 187.2. Fib level. And also I got this yellow trend line, okay? Above 187.2, that would be a breakout. Pretty bullish. Pretty bullish. With 189, 194, and 192.7-ish in play, okay? Above 187, possible the bottom is in. It'll recapture the green trend line and break out the yellow trend line. That's what bulls need to do. Otherwise, if we break down more support levels, 183.5, 182.2, 180, bearish, guys. All right? Tesla. For 3 trading days in a row, that 239 level has been stubbornly defending. Okay? Watch the breakout of 239, especially intraday when it has volume backing it up. Okay? And above 240.7, I would favor more upside. 239, 240.7. Bulls, that's what y'all need to clear to trigger your longs. With 244, 247, 250, 251.8-ish, and then 253. Those would be upside targets. Now, as long as below 239 and 240.7-ish highest, bears could still have a shot at more downside, but they need to show some follow through, which would be a breakdown of 237, 233.8-ish, especially 230.5. And I got a fib level, also aligns with my orange trend line here at 227. Below 227, I would be very bearish on Tesla. I would favor actually a drop to 218.3-ish, but you know, level to level. Level to level with 225.5, 221.5, and then we can 220, and then we can see that 218.3 level. All right, Apple, I got some new fib levels as mentioned in the previous video from the new all-time high, July 19th high down to August 18th low. Okay, I'm still using the higher time frame fib levels as well from January 2023 low to all-time high. So I'm using 2 sets of fib levels for the 2 different trends, and I'm just using those levels as reference on when to, you know, enter and exit trades. And as of right now, we have a false breakdown setup of this 178 level. Follow through would be to clear 180.5 and 182. If that does happen, guys, don't argue with the price action. We could head up higher, up to 185. Possibly 188. We still got that gap all the way up to 191-ish. All right? That's if it stays above 178 and clear those levels. Now, if we break down 178, we got a false recapture with 176. There's a little gap around 174.5. Pivot low around 173.6s, and then 172. All right, once below 172, also got 170. All right, so overall, above 178, bulls may have a shot at more upside. Below it is bearish. Okay, so use that level to guide you with your buyism or your trades. All right, NVDA, the monster. Monster stock, 457.5 is support, 453.4. As of right now, where it closed, 453.4 is resisted. All right. It could gap up, it could gap down, but overall, what you guys want to do is add these levels to your chart. So wherever it opens, you'll know which level to reference. Okay. It's hard for me to give you guys a plan right now for NVDA because, well, it's not morning yet in America. It's not Monday morning yet, which means, you know, NVDA could open higher, it could open lower. Okay, but the most important thing is you guys know where the levels are. You guys know this stock moves. Manage your risk wisely. You don't have to buy a lot of contracts because this stock is so volatile. I mean, if you do, good luck. I hope you win. But you know, manage your risk wisely if you're trading this stock, please. Overall, below 457.5, I'd be a little more bearish because that's where we got a little bounce. So if you break that down, whatever buying order was there, canceled, which is a bearish sign. And that will put lower targets in play, 456, 450, 453.3-ish, 452. Maybe drop a lot lower down to 448, 444, 442. Of course, 440 below that. All right. Now, if it can recapture some levels, starting with 459.4, that would put 460.5, 464, both in play. Above 464, I would favor, maybe a bigger bounce to the upside to 467.6s, 470, 471.3. Maybe go as high as 476.5. Okay, I say that maybe we're forming a right shoulder. Okay, I don't know. Looking like the left shoulder head. You guys know how this stuff goes. If it is a right shoulder forming, we could get a bounce. All right, so just watch those levels, use them as a reference. If we clear in a level or false breakdown setup, you want to look to long. If we're breaking down support or false breakout setup, you want to look to short. Okay, Microsoft. Okay, so yeah, I have, the critical level that I have for Microsoft is at 327. I'm overall bearish below that level. I'm overall bearish below it. So that's where bulls need to recapture for me to change my sentiment. Okay, we do have resistance at 325 first and then 327. Above 327, I'll be a lot more bullish, at least for the short term, with 329, 332.6, 335.5, and up to maybe 338.5. Okay, but it needs to recapture 325 and 327. As of right now, overall bearish below 327, but if we can break down 323, maybe we could see more downside with 320 and 317.6 in play. Below 317.6, that's a fib level. Breakdown of that would put 311.8 in play, but that's pretty far off. 316 would be in play first, and then 314.5. And then we can look at 311.8, okay? Amazon got very close to testing that white trend line, but it did get some buying pressure, and it recaptured that 132.6 level. That's a fib level that I have here, okay? If it can stay above 132.6, I like to see it to be bullish, to get above 134.4 and 135, especially 135. That was my equilibrium level to be bullish or bearish. So above it could be very bullish with 136.6, gap fill at 137.7 and 139 back in play. Now, based on this pattern, maybe, just maybe, we'll see an even higher high, which could take Amazon up to 146.4. Okay? But it needs to get, first of all, we play level. First thing it needs to do is get back above 135. Failure to do so is bearish. And if that happens, I'm going to stay bearish. What it needs to do is right now is break down 132.6 and the white trend line, which is around 130, which also happens to be a fib level. Below 130, bears are in control, which I have no problem with. We just following the price action with 128.5 and 126 in play. All right. Google trying to defend that false breakout of the bull flag. All right. If it breaks out again, it's likely gonna be legit. Maybe the initial breakout ran out of steam, ran out of strength, needed to cool down a bit. So if it gets the chance to cool down, maybe the next breakout will be legit. But it needs above 131 and 132.8 for me to be bullish on it. If 135, 136.5, and 138 in play. Now, if it breaks down 129.5, that's bearish. With 128, 126.6, and 125 in play. Below 125 is a breakdown of this bull flag, and bears take control. First target would be 122.5, where the gap is, and then 121 below that. All right. Meta battling, trying to put in a higher low here. Overall, it needs to be above 285.6. And based on this white trend line, it needs to break above 299. That's pretty big range for Meta. But you guys know Meta is a volatile stock. It's a very fun stock to trade if you know what you're doing. But as from here, resistance at 288, 290, 294. What's this pivot height? 299.5. And then the breakout of my white trend line is actually at 300.6. To recapture the 2023 uptrend line would be at 304.5. All right, remember the 2023 uptrend line for Meta. Okay, bottom is in. If we can clear this white trend line and recapture that blue trend line, bottom is likely in. All right, but as of right now, if it stay above 285.6, next support is at 282. Break that down. That's a sign of more downside. I'll be favoring 276, maybe down to 274.5, but if we break down 282, 280, and 278 in play first. Netflix. Chopping around that 415.3-ish level. Below it, bearish. Above it, relief rally may continue up to 426.5. If that clears, I need to see it break 432 and 437.5 to be bullish in favor of bottom is in. All right, if we stay below 415.5, watch the breakdown of 413. We could see lower lows, but first falls 08, falls 6.5, and fall 1.6 would be in play first. Then maybe we go test 398. That's the pivot low here. Below 398 could get another low. All right, what do I got next? AMD. We broke down that 103.5 level. Back tested as a resistance, found some buying pressure. We got to be careful. We got a big red candle. We got a doji, choppy candle. Watch out for those morning star patterns. Is it morning stars? Those bullish reversal patterns. If that happens, what it needs to do, either break above or gap above 103.5. Clear 105. That'll be the trigger to go long and recapture 107 to put 109, 110.3, and 112.8 all back in play. Watch out for potential reversal. Now, if we stay below 103.5 and break down 101.3, that's a good sign that we ain't getting no reversal. And 99.5, 97.7, and 96.2-ish would all be in play. Look to react. No crystal balls. Palantir. Put it quite simple. If it breaks down 13.8, I'm bearish. Well, overall, below 15, I'm bearish. But below 13.8, break that down. That's follow through. We could favor more downside down to 13. Maybe break down to 11.5. Fib levels 10.3 and 9.3. Okay. Overall, it needs to recapture 15 white trend line for me to be bullish. And then maybe I'll favor some upside up to 15.9. 17 gap fill is at 18. Next fib level is at 18.2. And then 19.3 above that. All right. Let's take a look at the dark pool. Dark pool for Friday. We had a lot of liquidity coming in at 439.96, right about 440. 2.4 billion in premium at 439.96. 1.3 billion in premium at 439.95. 1.2 billion at 439.97. Let's round this to 440, shall we, to keep it simple. All right, that's the fib level. That's the dark pool level where we get a lot of liquidity in. So basically, in my opinion, that's actually around where the SPY closed. last Friday, so maybe they they got into some position um around it. So watch out. There's liquidity around there that's being tagged right now. So possible gap up or gap down. Okay, just watch out for that. Remember the levels that I gave you. But overall, above 440, based on the dog pull level, could be bullish. Below it could be bearish. All right. Can use that as an equilibrium level, if you will. SPY filter for 500K premiums or above. Bearish. Uh-oh. I don't know y'all noticed, but the flows has been pretty decent lately. They've been pretty helpful, in my opinion. A little bearish for triple Q. IWM bearish. Dow Jones bearish. Uh-oh. Tesla is bullish. Apple is bullish. NVDA is bullish. Microsoft is just straight up bullish. Just giving y'all information. Just giving y'all info. Amazon, nothing? No, I don't believe it. Let me type this again. Nobody trading Amazon? GOOG. Am I tripping? No one's trading Google? Really? Google with the L? Oh, okay. Bearish with Google with the L. How about Meta? All right, bullish on Meta. You gotta be kidding me. Let me check it again. Am I typing too fast? No one traded Netflix? Wow. All that beautiful movement. No one traded AMD. How about Palantir? Nothing for Palantir, guys. That's what Cheddar Flow is showing me. Nothing for Palantir. All right, guys. Thank you guys so much for watching. I hope I was able to help you prepare for this coming week, or at least tomorrow. I'll definitely be making some more videos this week, so hope to see you guys and talk to you guys again very soon. Peace.